Well, I finally bought Uber stock, and let me tell you why in this entire video, what my cost basis is, what I'm buying it for, and why I believe it's such a great investment. So today we're going to break down all of those things and make sure that you guys like this video if you want to see more content like this. So let's get right into this video, not waste any more time, and get straight into it. Now, as you can see here, I took a screenshot from my portfolio, blocking out any account numbers, but this is my Uber play here. I had actually made a purchase using cash. I bought 200 shares, price of $79.50. I bought about $15,900 of this stock. And let me tell you why. I really do like Uber and I really want to own, I guess, more. There's a two-parter to this. So I actually might own more, but I'll get to that later. So the reason as to why I'm owning Uber is one, the valuation, and two, the moat. I do think that there is still a moat here with everything going on. But let's get right into the valuation first things first. So you are looking at a company here that is trading at about $165 billion in market cap while they're having a PE of about 25. This is 25 given that they have a one-time tax event that made their earnings higher. This is actually 10 that you're seeing, but realistically you can anywhere imagine a 24 to 25 PE today. On a forward basis, it's at a 23.6, which is pretty decent given the growth rates, which we will get to soon. But you're looking at a price to earnings growth, a PEG ratio of 0.75, and that seems rather low. Peter Lynch style investing says that anything under a 1 seems to be doing well, seems to be a great investment. And a company that can just grow free cash flows, their return on invested capital, is going to give us a great return and achieve alpha as investors. So this company alone is having a return on equity of about 73, return on assets of 5, and a return on invested capital of a little under 8. And this looks to be low, but it seems to be that Uber is a great growth company, a great aspect company that is going to, I guess, win amongst other players. They're already the dominant player. They have majority market share in the ride-hailing space. Ride-hailing space, they'll get more market share as time goes on with their partnerships. So let's look at their financials here first. The trailing 12 months here, we can see that Uber has actually grown their revenue at 18%. 18% revenue growth is nothing to sneeze at. That's very difficult for many companies to do. On the bottom line, it seems that they're growing at about 200%. But given that this is actually helping from a $4.9 billion tax implementation, then it should be anywhere around 12, right? 12 billion, 13 billion, give or take. That's still a lot versus where they were the previous year. You can see that it was about 4.4 and today it's about 12. That's an immense amount of earnings growth that you're seeing for the company here. If you're looking at free cash flows have also grown immensely as well. Look at this, $8.8 billion versus the prior year, they were getting $5.9 billion. So they're able to grow their free cash flow per share from $2.78 to $4.07. And that's key because when you see companies growing free cash flows, that just means that they are able to throw that money back into businesses, get that R&D, get that partnership that they need, and buy back their shares. And what people don't really understand or see is that Uber is buying back their shares. Now, as you can see here, Uber bets on their loyalty program to drive growth, and that is going to unveil their $20 billion buyback plan. And when a company is able to buy back $20 billion at that, your shares are gonna go higher. So as they buy shares off the market, it really just increases EPS, which then allows the stock to then rise. So I'm very happy that they're buying back the shares if they can't find any other place to put the money else. By having these partnerships that we'll get into, then Uber can grow top line and also their long-term moat, as well as, return that value back to the shareholders today. Now, keep in mind here that Uber's operating metrics look astounding. It looks great. It looks immensely growing to the upside. God, my English is terrible today. Pardon me, but you cannot sneeze at monthly active user growth here of 17% every single year. This is been growing a lot of the times to about 189 million customers today. Many people are on the app. This app is sticky. When people use Uber, they just want to keep using Uber. They have more market share than Lyft. It's probably a 2-to-1 ratio, if not even better. So currently, when it comes to ride sharing services, Uber takes the cake. Now, people think, oh, Waymo might take over, Waymo might eat their lunch, or Tesla might actually eat their lunch as well. But you can also book a Waymo through an Uber. If you do not want a human driver and you want the autonomous vehicle driver, you can book your trip through Uber to get a Waymo. So just wanted to clear that out of the way, because there is that partnership. And of course, I assume that this partnership, Uber is probably making anywhere between 15 to 25% on the deal, while Waymo is generating a bunch of that money still. But nonetheless, that just shows how strong the app is, how sticky the platform is. When people have the app, when people have subscriptions to Uber One to get free deliveries on their food and discounts on rides, then people want to use the Uber app because maybe sometimes it's just better, it's more efficient, and it's convenient. So that's the whole case there. Gross bookings here growing 17.5%. As you're growing more users, you having more bookings throughout the entire platform here. Trips growth also growing 19%. When you're growing users from prior the year, you're looking at 161 to 189. That's almost what, 30 million users. So 30 million users attributing to high double-digit growth here is very good. I like that. Mobility has been growing at 19.5%, delivery growing at 23%. We know that the biggest competitor to delivery is actually going to be Uber Eats versus DoorDash. Uber Eats probably number 2, DoorDash at number 1. So as they're growing their footprint here, can they reach out to more restaurants, get that advertising that they would like, and put that back into the platform and actually get more people to use Uber Eats over DoorDash? We know that DoorDash has all of these partnerships with, let's say, credit cards, where if you sign up for a credit card, get your annual fee, you will be able to get DoorDash for free, or I guess complimentary with the annual fee. But Uber doesn't have any of that out there, not that I know of yet. So maybe there's more partnerships to come. Maybe there's a different strategy when it comes to delivery and growing that there, but it seems that they're doing a great job already. And if they can steal an Amex to partner with, that would just be insane. It probably won't happen just because DoorDash is already an established partner being number 1. But what if you can get somebody else, like a Capital One, maybe, or a Citibank? Who knows? The possibilities are endless. Though those might already exist, I just haven't heard of them. They're not mainstream. Despite being at $5 billion, this hasn't had much growth, but it is a sustainable business that is pretty stagnant. This is a steady stream of income for Uber. Now, when it comes to EBITDA, looking at the mobility versus delivery, we could see that delivery is just much more profitable than mobility. That's probably due to the fact that you might have advertising spend come into here, hit this number as well. And for drivers on delivery, you probably don't need to, I guess, pay them as much compared to an Uber driver. You're paying for an entire experienced service while having somebody that is reputable behind the wheel, protecting people's safety, versus a delivery driver that just needs to deliver food to your front door. So the overview here, you can see that the price is actually $79.69, and the week range has been pretty volatile. We've seen $60 all the way to $102, and right now we're pretty much smack dab in the middle. And it seems that a lot of people, a lot of analysts might think that the fair value might be 8% higher than it is today, $87. But I actually think it's a little higher based on my own assumptions. Now, according to the platform, the 5 analysts have revised their earnings upwards for the upcoming period. RSI suggests that the stock is undersold, trading is at a low earnings multiple, and they're a prominent player in the ground transportation industry. I agree to all of that stuff. I don't even have to check the RSI to know that it's oversold. I just know that this stock has just been beaten down with everything coming out in the past couple of weeks. We've seen Tesla roll out their autonomous vehicles announcement in Texas, Austin, and that has been the craze so far. People are kind of obsessing over that, and if Tesla can actually pull it off, then it poses a big threat to Uber, which is why the stock is potentially selling off as well. They also have protests in Europe, which is about 30% of their business, so if there's protests, people might not actually use the app later on if it gets banned in other regions. All things considered, I don't think that's likely, but we shall see. Time will tell. I do have an affiliate link with Investing Pro down below in the description. And if you guys actually like all the things you're seeing on Investing Pro, just make sure that you're signing up. Link in the description. Financial health of this company seems pretty great. And as you can see here, the cash of this company is about $9 billion. Current assets of $15 billion with their debt of $13 billion, which means that with their cash and potentially liquidating some of their assets, they could cover their debt. This is not too worryable because it seems that Uber can generate free cash flow, and in the next couple of quarters, if not years, they are able to just keep this free cash flow number growing. So just let's look at free cash flows, right? Free cash flows, we are seeing cash flow from operations at $2.3 billion, free cash flows of 2.2. This just means that they're able to keep a lot of it in their pockets. This just means that their cash flows are great so far and should anticipate greatness going forward. And something that I want to point out here is if you come to their cash flow statement, you could see that their stock-based compensation has been dropping down. It used to be $1.9 billion and now it's about 1.8. It hasn't really changed, but still, this is something to know. While they're buying back their shares here, repurchase of common stock, you can see that they're actually buying back a lot of their shares, $5.2 billion in the past trailing 12 months. So this is something notable for Uber. And I'm excited that they are buying back the shares, $5.2 billion, and they've pretty much committed to $20 billion in the future. So this is a great sign for Uber. Now, I want to take you through a couple of charts here, and something that really calls me out is this free cash flow yield chart. You can see that the free cash flows have been negative in the past and now they're in a positive light. And you're getting a free cash flow yield on Uber at about 5.2. That's very great. Anything above 5 is great. Your company like this is going to just increase cash flows, and it seems that they're not burning cash so much now. They're actually able to have free cash flow, put that money back into the investors' pockets, or grow the business. So which is what I like, to see. For it to be trading at a free cash flow yield of 5, I think this is a pretty good deal. Now, something I want to bring your attention to is this SWOT analysis here. We can just graze through this really quickly because you guys can pause the video if anything. There is a market share leadership for Uber of about 70 to 80% within the US, and they have strong mobility presence here with about 70 plus countries in access as well. They have a diversified business model spanning mobility, delivery, freight, and expanding offerings in grocery and retail, creating multiple revenue streams. That's their Uber Eats platform there. They have strong financial health and profitable operations with 4.5 EBITDA margins and significant earnings beats. They have a strategic partnership with technology leaders like NVIDIA and Stellantis to position for their autonomous vehicles. And if you don't know, NVIDIA is the kind of powerhouse brain behind the Stellantis vehicles, and Stellantis vehicles is going to be the autonomous vehicle that you can then use to book under the Uber platform. So as Uber partners with NVIDIA and Stellantis, this is going to be the long-term vision. It's about 5,000 units that they want to ship out in the near term, but I think by 2027, they want it to be a 100,000 car fleet. Something that I've researched and looked into. Advanced technological platform leveraging data and AI to optimize operations, pricing, and user experience. So they just want to make the platform better for users. So here are the opportunities with Uber. The autonomous vehicle market is going to expand, and Bank of America estimates that to be about 20%. So US vehicles are traveling, a lot more frequently. And that's going to be the trend in the future. This could represent a $900 billion to $1.2 trillion opportunity for the company. There's significant cross-platform growth potential with only 20% of the customers currently using both mobility and delivery services. So if you make the app more efficient where people are able to use both of the platforms at once, you might have a better opportunity. There's expansion in grocery and retail delivery segments, which has reached $12 billion run rate and is growing faster than delivery in restaurants. Insurance costs could be reduced, and new revenue streams through Uber AI solutions could leverage a new driver network for AI-related microtasks and create additional earning opportunities. Now, some of the threats I want to get into are that there's intense competition when it comes to delivery, especially from competitors in Western European markets where Uber has established their leadership. Now, regulatory challenges between between the driver classification and the gig economy model could generate legal expenses and just opportunities that are uncertain. We don't really know what's going to happen in the future, so this is a risk here. Technological disruption from autonomous vehicle companies could choose to operate independently rather than partner with Uber's platform. So if Waymo grows big enough, then maybe they don't want to partner with Uber, and then they could kill that partnership. If there's not the app that keeps people onto the platform, then there's really not that much of a moat. And if that day comes, then Uber would likely die, if not fall very far behind. And there's also potential for margin pressure as the company invests in new growth initiatives while maintaining competitive pricing in their core business segments. There's this entire report here that I pretty much have gone through in other words, but if you want to take a look, just read for it yourself with Investing Pro. So here's my entire Uber play. You've already seen the $15,000 that I've bought in just shares alone, the 200 shares, but there's also this other play here. Now, I did sell cash secured puts. That just means that I'm saying that by January 23rd, 2026, will Uber still be above $79? And if it is below $79, this will execute. This will go through. And I will actually be an owner of 200 more shares at $79. If not, I collect a premium of $458. I've already done that. I've already collected the premiums. This $458 has been awarded to me already, has been given. So I figured, why not wait and see where Uber could go? If Uber is $79 by the end of this time frame, I'll own it. I would love to own more Uber. But if not, I'm comfortable with the position that I have, $50,000. I'd be okay with doubling that, and that's probably the max I'd put out there. For me to generate this premium, I figured it's worth it. It's nice. It's great to have. But I did want to just pick up shares in case I don't actually get these shares out here. It might seem rather small, but I do think that with all the risks potentially with Uber out there, with Waymo being the dominant market player potentially in the future, or Zoox taking over that market, or just Uber falling behind, there is that risk to reward ratio there where you're not throwing the entire farm. And it would be great for me to pick up shares again at $79 and just double this position again to $30,000. And that for me would be a decent portion that I would be okay with allocating to Uber. You made it to the end, just so I know, because you guys aren't making it. There's one guy that actually made it to the end last video. I want to know how many of you guys actually made it to the end. Let me know how many Uber shares that you guys have. Let me know if you guys are bullish on the company. Let me know if you guys are bearish on the company. And I hope you have a great one. Thank you guys so much for watching. Peace out.